So now I want to actually move into the choppiness index. And the most important thing about this metric is it is directionless, but it works on time frames. The magic of this thing comes from understanding all the different time frames and how they all fit together. So every single bull market, which you can see here, this is our bull. This bull is a monthly scale bull. It is, multi-months up, multi-month sideways or correction, multi-months up. It's a macro scale thing. It's been going since 2023. But within that, we have a miniature bull and then a miniature bear, and then a miniature bull and then a miniature bear. So within that time frame, and markets are always like this, they're fractals. So you get this bull market on the, this is like a big weekly swing higher, and then we had this is like a miniature bear market. Think about these chop consolidation periods. They have very much functioned a little bit like a bear. They've allowed the market to reacclimatize and go through that process. Now, the choppiness index, for those who may not be familiar, I talk about this fairly regularly. It's a common feature on this channel, and the choppiness index was actually originally developed for commodities. Let me actually just I might get rid of the monthly here. So the choppiness index, think about like a fuel tank. So when the market is chopping sideways, and for this particular purpose, the standard period is a 14-day or a 14-week look back. From my studies, and again, this isn't rocket science, I've just literally looked at how often Bitcoin tends to trend and how long it trends for. I've found that a 10-week and a 10-month for the bigger time frames is better. If you imagine a candlestick chart like you see on TradingView, imagine 10 candles that are all trading in the same range. Because the highs and the lows are all in the same zone, that's going to give us a very high, it tells us we've been consolidating or the market's going nowhere. It's reacclimatizing. That's going to give us a very, very high reading on the choppiness index. So when all your candles are stacked together, or when we trend up and then we pull back. When you pull back, you're backfilling previous candles. So there's more candles within the same trading range. So corrections actually recharge. And you can see this. This is why markets go up and then they pull back and then they go up and they pull back and then they go up. It's looking at where's this tipping point when we've gone sideways enough and people go, you know what, we're ready for the next move. Or we correct and give the bulls time to jump in. And it works on both sides. When you're trending lower, you can see here, this is when Luna started imploding. Massive amount of energy on the weekly. So the weekly was ready to move. We moved. And this move to the downside exhausted and it ran out of our fuel tank. What did we do? We chop solidated from July all the way through until FTX imploded. So this move, and again, you can kind of look at all the different exogenous factors and all that stuff. If you just think about a commodity market, it's a thing that trades, right? There's all sorts of stuff that goes on. And again, it's not a perfect model, but the idea is we had a huge amount of energy and it released to the downside. Here, we have a huge amount of energy and it released to the upside. Now, this works on multiple time frames. So in this case, we actually have a full tank of gas. We are ready to go on the weekly basis. So that's more or less, if we think about 10 weeks, we've been chopping around up here for 2 months. So, that's 8 weeks straight off the bat. The weeks leading into that, they were kind of on the way higher. So it makes sense that after that 10-week period, we've got a full tank of gas. Now on the monthly basis, we got a full tank of gas. So you can see here that in 2024, we'd fully depleted our gas tank on the monthly in the green. It took us 8 months, very same scale, right? So this is an 8-week chop consolidation. This was an 8-month chop consolidation. And again, there's no hard and fast rule of how long these things need to go for, but you can start to see that if you're using like a 10-week period or a 10-month period, it's somewhere in that ballpark. We had a full tank of gas. The market exploded higher. We expended some of that energy, but on the monthly scale. So if you look at this looks like a downtrend and an uptrend. But if you look at this on the monthly candlesticks, it's a bunch of candles just stacked next to each other. So on the monthly basis, we're kind of just slowly building up a little bit of energy, but we've still got plenty to go. So really the story here is that on the macro scale, the monthly, on the 2023 until now bull market, we have plenty of gas. And on the short term, we depleted a lot of our tank. We needed a period to just chop around and the market is now ready to go. So across all of the time frames that matter, the weekly and the monthly, the market looks like it's ready to move. Now, this is non-directional. This does not tell us that we're going to move higher. We have to use other tools to do that. And as you'll see, my bias remains to the upside, and I want to explore that further. So anyway, that's the choppiness index. I think we're ready to go. We've done the chop consolidation that had to happen. It's been done on the weekly, on the monthly. The next move is going to have some legs, I think.